Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about GREENTOWN SER interim report. GREENTOWN Service Group Co. Limited offers a diverse range of businesses and services, including residential property management consulting services, project planning, design management, construction management, marketing management, community living services, home living, community space, property asset management, cultural and education, technology services, nursery and hotel/resort management, recreational and exhibition services, market promotion and business consulting, housekeeping, and computer networking technology education, and financial service outsourcing, supply chain management and advertisement design equipment maintenance, and training services, wholesale and retail, parking, construction and design, lighting construction, investment management, and science and technology promotion, community leasing, sales, and other services. The significant increase in GREENTOWN Service Group's stock price over the past year can be attributed to several key factors. Firstly, the company has demonstrated strong financial performance, with a 14.83% annual growth rate in net sales and a substantial 25% year-over-year growth in operating profit. Additionally, analyst upgrades and positive outlooks have contributed to the stock's rise, with UBS upgrading its rating from neutral to buy on July 23, 2025. The property management industry's shift towards high-quality development has also positively impacted GREENTOWN Service Group's performance, leading to improved operational efficiency, service quality, and growth. Furthermore, the company's attractive valuation, with a low PEG ratio of 0.41, indicates potential for future growth. Overall, these factors have combined to drive up the stock price by 38.05% over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the steady expansion of property services and consulting services, with growth rates of 20-21% and 12-13%, respectively. Technology services also experienced significant growth in 2022 and 2023, with a high growth rate of 296.8%. Additionally, community products and services saw an increase of plus 5.1%, while community space services grew by plus 13%. On the other hand, revenue decline is primarily attributed to the decrease in home living services, which dropped by minus 53.8%, and community living services, which declined by minus 6%. Management consulting services also experienced a decline of minus 2.5%. Net income and profit margins. A changing trend, the net income of a company has undergone significant fluctuations over the past 4 years, with a notable decrease of 33.8% from 2021 to 2022. However, this trend reversed in subsequent years, with an increase of 18% from 2022 to 2023, and further increases of 19.1% and 22.2% from 2023 to 2024 and 2024 to 2025 respectively. Profit margins have also experienced changes, albeit at a slower pace. The margin decreased by 45.5% from 2021 to 2022, but remained stable at 5.3% from 2022 to 2023. It then increased by 11.3% and 15.3% from 2023 to 2024 and 2024 to 2025 respectively. The reasons behind these changes are attributed to various factors, including cost control measures, reduction in selling and marketing expenses, and administrative expenses, as well as the expansion of operation scale and improvement in management efficiency. These efforts have likely contributed to the company's improved financial performance over time. The company's operating cash flow. A mixed picture, a review of the financial summary, reveals a mixed picture regarding the company's ability to generate positive operating cash flow. While some sections indicate negative operating cash flows in 2022-2025, others suggest that the company is generating positive cash flow. Specifically, page 15 and page 69 report negative operating cash flows, while page 24 and page 117 contradict these findings with statements of positive operating cash flow. This inconsistency raises questions about the accuracy of the financial data and the company's overall cash management practices. The company's financial summary reveals a mixed picture regarding its debt levels and interest expenses. While total liabilities have increased from RMB 8,251,901 to RMB 9,909,199 107 between 2022 and 2025. The net cash used in financing activities has decreased slightly. Notably, interest paid has significantly decreased from RMB 12,338 to RMB 2051, with a substantial drop in interest expense on bank loans from RMB 3857 to RMB 1047. However, interest expense on lease liabilities has increased from RMB 12,365 to RMB 14,347. Overall, the data suggests that while there are some fluctuations, there is no significant change in debt level or interest expenses across all pages. The company's financial summary reveals a mixed performance across its segments and regions. Property services stood out as the top performer, with revenue growth of 10.2% year-over-year. In contrast, community living services underperformed, with a decline in revenue of 6%. Consulting services had a moderate performance. Regionally, the Yangtze River Delta region and other regions performed well, with increases in revenue and profit. However, the Hangzhou region underperformed, with a decline in profit. The Bohai region also struggled, with decreases in both revenue and profit. Management's outlook. Focusing on value creation and stability, the company's management emphasizes a dual approach to its outlook and strategy. On one hand, they prioritize high-quality development across all business lines to create value for shareholders and society. Page 20. This focus on innovation and customer needs is aimed at driving growth and competitiveness. On the other hand, management also stresses the importance of maintaining overall stability while leveraging synergies with existing businesses. Page 37. They aim to enhance market share and contribute to scale through strategic investments. By balancing these two objectives, the company seeks to achieve long-term success and sustainability. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In the past 2 years, it has paid dividends totaling RMB 60,891 in 2024 and RMB 23,303 in 2025. Additionally, the company has also bought back shares worth RMB 122,273 in 2024 and RMB 60,022 in 2025. Concerns about inventory buildup or supply chain disruption exist. There are valid concerns regarding inventory buildup or supply chain disruption in our operations. A decrease in purchasing goods from key suppliers, such as Bluetone Agriculture Technology and Zhejiang Uniong Supply Chain, has been observed. Specifically, the numbers show a significant drop in purchases from these companies compared to the previous year, 27,000 versus 287,000 for Bluetone, and 208,000 versus 248,000 for Zhejiang. This trend raises concerns about our ability to maintain a stable supply chain and manage inventory levels effectively. That concludes the financial summary for GREENTOWN SER. Feel free to comment below, and I will be happy to answer them when possible.